to our opening panel of the 6th European Blockchain Convention. We have here 5 experts to talk about crypto assets. Very, very exciting. Welcome to the 5 of you. I'm now going to give the word to Coty, and she's going to present the panel. Thanks to everyone. Bye-bye.
Good morning, everyone. Thanks for attending the European Blockchain Convention. I'm Coty de Monteverde. I'm head of crypto and blockchain at Santander and vice chairwoman of Alastria. It is a pleasure for me to open up this edition, moderating the first panel about the institutionalization of crypto assets. And the interest in decentralized financial markets and crypto assets is growing rapidly, with assets under management equivalent of several $billions. Most of us would agree that crypto assets have potential. That is why we are all here today, right? But in order to create trust and scale, institutionalization is needed. And we are talking here today about all types of crypto assets: cryptocurrencies, security tokens, utility tokens, tokenized securities. And we are fortunate to have 4 distinguished speakers with extensive experience in the crypto market. Each of them focus on different aspects that are key for this topic, right? As security, regulation, compliance, etc. So let me introduce you our amazing speakers, starting with Patrick Heusser. He's head of trading at Crypto Finance AG. Prior to joining the firm, Patrick worked as an interest rates trader at UBS, and he held various positions in the interest rate, commodity, and currency trading division in London, New York, Singapore, and Zurich. Patrick is an expert in trading and risk management and has experience in leading startup projects. He holds a business school degree in banking, and he has completed various courses in technical chart analysis. Welcome, Patrick. How are you?
Hello, everybody. It's a pleasure to be on this panel, and I'm very much looking forward to a lively discussion.
Thanks, Patrick. We also have today Karl Gridl. Karl is an associate partner at Bain & Company's Zurich office and drives Bain's crypto and digital asset-related activities in EMEA. He's part of the Global Financial Markets Infrastructure Leadership Team, as well as EMEA Banking Leadership Team. His clients are financial institutions, fintechs, venture capital, private equity firms. And in the last 3 years, his work is entirely focused on cryptocurrencies and digital assets, specifically strategy, commercial due diligence, M&A, and ecosystem build-up. Karl acts as an advisor to a number of startups in the fintech blockchain space. And prior to his current role at Bain, he was director at UBS in a group-wide strategy role. Hi, Karl. Great to have you here today.
Hi, everyone. Great to be with you and looking forward to an exciting panel.
Great. Then we have Jean-Baptiste Graftieaux. Sorry for my pronunciation. Before joining Bitstamp again in 2021 as CEO for Europe, he had been the executive and chief compliance officer at the company in the years from 2014 to 2016. JB is back at Bitstamp with even more fintech and payment experience to support the company's vision. In his Bitstamp off time, he was a managing director at eBay Europe, where he led the regulatory business operations for payments in Europe and spent 5 years on the board of directors of several eBay entities. Prior to his leadership role at eBay, JB worked at PayPal as executive and EMEA chief compliance officer. And in his first 2 years at Bitstamp, he was responsible for obtaining regulatory licenses for the EU-based business and operations. JB is now responsible for managing Bitstamp's regulatory relationships and leading compliance and legal teams, as well as growth and business development in the region. Welcome, JB. Whoa, you have a huge responsibility, right? How is it going?
Hey, everyone, and thank you very much for having Bitstamp today. Very happy to be here and looking forward to the panel today.
Thank you, JB. And our last but not least speaker is Roberto Machado. He's a serial entrepreneur with extensive experience in the financial technology and digital payments industry. He graduated in telecommunications engineering from the Polytechnic University of Catalonia and worked there in a EU-funded network virtualization project. Roberto has spent more than a decade in Asia, where he has been involved in the fintech and cybersecurity industries in companies like Toro, dedicated to mobile payments technology, for Qihu 360, one of the largest cybersecurity firms in Asia, and in close contact with the startup ecosystem in Taiwan and Singapore. In 2018, he joined the crypto custody firm CYBAVO, and he has recently returned to Europe to lead the global expansion of the company from its office in Luxembourg. Hi, Roberto.
Hello, Coty.
Your participation in this panel is timely as security is front and center for crypto assets, right?
Yes, yeah, it's my pleasure, and I really look forward to this discussion.
Cool. So let's start with it. We see that crypto assets pose both opportunities and challenges. So Patrick, you have an extensive experience in the financial industry. Can you tell us where do you see the greatest opportunities of digital assets?
Sure. I see it as two main things or shifts in the market, what crypto assets are doing right now. First, I would like to elaborate a bit on the cultural shift. I believe that my generation was not really taking responsibility for their financial actions, or let's put it differently, the banks or asset management companies sort of took that responsibility off me and basically told me with my risk profile and with all the compliance issues what I can do and what I cannot do. Cryptocurrencies and the ecosystem is basically now opening the field for the younger generation. But it's not only just more opportunities, it also means take responsibilities for your actions, for your investments you want to do. So do your own due diligence. You need to check in what you go, and you need to be aware of the risks that you're going to take. But for this generation, I really look forward to it, that they can do their own decisions and be responsible for it. On the second part, I see a lot of new fields that opening up, not only just financial products or newly engineered products that are already available in the traditional finance, but I also see massive potential in the gaming industry with the blockchain technology as the base layer of a new ecosystem that can grow on that part.
Thanks, Patrick. And Karl, as you're working with all types of clients, you have a great understanding from all points of view. What would you add?
Yeah, first of all, I can fully echo what Patrick said. I would maybe try to even generalize, because the technology that really helps to address any potential risks or shortcomings that come with centralization. So that could be the risk of having monopolistic structures, the risk of having anti-competitive behavior, or maybe even rent extraction. And with the decentralization, you have the opportunity to move towards a setup that is much more transparent, interoperable. In terms of the financial world, we can talk about financial inclusion. Patrick already mentioned the access to a full new range of investment products. And ultimately, it's really about giving back control to the users of any sort of network or service. That's kind of the general opportunities that we have at hand. I also fully agree with Patrick's statement on gaming and the shift from focus on financial and maybe a little bit of pharma to really retail and gaming. That's something that we see across our client base, especially in the last 12 months, I would say. The requests from retail, gaming, media, entertainment have increased significantly. And in that areas, and we have done a partnership, for example, in the luxury goods industry with the Aura blockchain consortium. And there it's really about authenticity, about tracking provenance of goods, and also about enhancing customer journeys and enhancing user experiences. So very exciting opportunities ahead of us.
Thanks, Karl. There are also many challenges, right? It's clear that it's necessary to establish a regulatory framework that guarantees the adequate institutionalization of this market. Europe's MiCA crypto rules are coming soon. And JV, do you think that this proposed framework would simplify the expansion of crypto businesses? Would it facilitate development adoption?
Mm-hmm. It's very interesting because, you know, the first Bitcoin was created back in 2009, so only 12 years ago, basically. And since that time, the regulation was not necessarily, you know, helping the ecosystem, but we see a shift. We are in the middle of a regulatory transitional period, if I can say, in Europe specifically, where if you want to operate a crypto business, you will need to apply for, in some countries, some, you know, licensing or registration, but in some other countries, there are different paths there. So it's quite complex at the moment to navigate around the regulatory requirements, and it would be extremely helpful, and Bitstamp is absolutely welcoming the new MiCA regulation, which might come into force at some point in 2023, probably 2024, so that, you know, it will give an easier access to the market, not only to institutional clients, but to embrace also retail clients, where very similar to payments institution today, banks and electronic money institution, with one license, one MiCA license, the company could basically passport its product and services across Europe to facilitate, you know, the access to institutional clients and also retail population. So definitely, MiCA will change. It will increase level playing fields and absolutely increase, you know, crypto access to anyone, companies and retail. And we are definitely embracing MiCA as we speak with Bitstamp.
Good. Anyone else wants to add anything regarding regulation? It's a hot topic.
Maybe I can add some from the business side. Regulation is for the institutional client very important. If there is no clear regulatory framework, it's going to be very difficult for money managers to put capital or risk into an ecosystem if it's not clear how it's going to be regulated. On the other hand, regulation is also, I wouldn't say hindering, but it's slowing down innovation. And the way the crypto ecosystem is innovating is super fast, and regulators are having quite an issue to follow that pace, which is absolutely okay with me. I just hope they don't give up if they see the train leaving the station too quick, that they just say, well, we missed that one, it's over now, and we just shut the doors. So I just hope they try to keep on keeping the game and make it accessible for everybody.
Totally. And they need to move fast, as the crypto space is moving super fast, right? So we see in that sense that Switzerland has become one of the most friendly places for crypto businesses. Karl, you as an associate partner at Bain Zurich office, what can we learn from Switzerland and from other countries?
Yeah, there are definitely some factors that favor Switzerland as a good place, not only for crypto. You see the nice weather coming in here. But on a more serious note, there are actually a number of factors that you can look at, and some of them can be replicated in other locations. Probably others are more specific to Switzerland itself. I would start with the ecosystem. Switzerland has established with the Crypto Valley a unparalleled ecosystem very early that has been a very good breeding ground for crypto innovation and startups. And right now there are probably 1,000-ish startups in the Crypto Valley and the surrounding areas, and very well-known or prominent organizations and foundations are headquartered there. So that's, I would say, reason number one, or factor number one. And if you want to replicate that in other locations, it's really about making this positioning or making this statement very explicit and attracting these types of talents and topics. The other factor, and we mentioned it already, is regulation. Switzerland has been very early in the attempt to provide regulatory clarity. Swiss government and Swiss financial market authorities have generally been open to cryptocurrencies and digital assets and the innovation around it. And I'm not a lawyer, so probably not the best one to argue whether it's the best regulation that you can have or there are others that are superior. But what the important factor is the clarity early on. And there are many questions also in Switzerland that are unanswered. But rather than trying to have a holistic framework answering all the topics or addressing all the topics, moving in a pragmatic way into certain aspects, that is probably what helped and could be a blueprint to other regulatory frameworks as well. The other one I would say is capital. There is availability of capital in Switzerland for startup activities, for even very early stage funding, which relies a lot on informal networks. And you have great alumni networks, for example, at Swiss schools. So many people in the startup space that I talk to have actually found their first set of investors in these networks. So I think that's an important factor, and it definitely helps to as a factor to have such venturing activities. And the last point I would like to mention is really talent. You know, Switzerland, with the background or the history in financial services, there is a great talent pool that has know-how on how financial markets work. And I think, Patrick, you are a good example. You just mentioned you were at UBS, a trader at UBS before, and you see that many times that either founders or members of the management of these startups have a history in the traditional banking world in Switzerland, or the board members of startups and ventures somehow have either a network or an own exposure in the banking or asset management or trading world in Switzerland. So I think that's really a number of factors, some easy to replicate, others more difficult to replicate. And yeah, curious to hear, Coty, what you think about Spain. You know, do you need to move Madrid and Barcelona as traditional finance world and startup world closer together, or maybe that's not the right way to look at it?
I'm going to move to Switzerland. No, I mean, seriously, I mean, well, we have the same problem as many other European countries, that there's a lack of regulation, but well, that's coming at least, but it slows down crypto adoption. As an example, specific example of Santander, in 2019, we launched the first end-to-end blockchain bond on the public Ethereum blockchain, and we did it under the UK law, not under the Spanish law, because the FCA recognized a public permissionless blockchain as an independent third party, so we could register the bond in the blockchain under the UK law. However, lately the regulation in Spain is advancing gradually, and for example, banks and exchanges that operate with cryptocurrencies now must register with Banco of Spain. This is something new, and also we have a regulatory sandbox that was set up this year, where a big number of the projects that have applied to the sandbox are related to blockchain and crypto. So I would say that we go slowly, but we are progressing, right, on the right direction. And regarding you mentioned Madrid, Barcelona. I mean, obviously Madrid, Barcelona are the big cities, and there's a lot of talent, big companies there. But we see that Malaga, for example, that has a great weather, by the way, is popping up as a blockchain hub. They have a big number of top-tier professionals. The University of Malaga, the Andalusian Tech Center, and the Malaga Blockchain Cluster are promoting training and education on blockchain, and there's big companies that are setting up their blockchain labs there in Malaga. Also, I see that Aragon is also a great place and has a great ecosystem for blockchain startups and projects. Anyway, with the pandemic, as we can work remotely everywhere, right? So it's quite scattered, but I would say Madrid, Barcelona, Malaga, and Aragon, Zaragoza, as top places for blockchain development. So another challenge, apart from regulation, is guaranteeing a high level of security. And Roberto, you're an expert in this. You represent CYBAVO, a leading key custody provider. So what can you tell us about the security requirements that are needed to protect crypto assets?
Well, I think security has been has been proven a challenge, right, for the, I would say, institutional adoption of digital assets in general. There is always a risk. I would say institutions that the most challenging risk or the most challenging value that they are afraid to lose is the reputation. Banks is one of the examples, right? So not being able to have visibility on what's happening with their assets at different levels, it's been undermining that adoption from their end. So we always think about security, I would say from the cybersecurity point of view, right? Like, okay, can I get hacked? Can my Bitcoin get stolen? But there are actually, I would say, different focuses that institutions should need to pay attention, right? There are 4 different types of challenges or risks. So starting from cybersecurity, of course, they will also change depending on the use case itself. It's not the same having your crypto assets stored under a shelter in a mountain in Switzerland as some cold storage providers are doing, right? This could be like perfect solution for security long-term storage. But how do you integrate that with a demanding business operation needs, right? You need something like 1,000 transactions per day. How do you access those assets if they're under a mountain, right? So there are different, I would say, parameters that need to be taken into account, right? So I would say there are 4 important challenges or risks there. The most obvious one, as we were saying, is cybersecurity, right? How do you safekeep the private keys? The representation of the digital asset are the private keys, right? How do you safekeep them? How do you avoid them being vulnerable because of software vulnerability, system security, right? There are vulnerabilities. Then how do you integrate any disoperation of the assets into your business logic, right? In the end, when you are developing a company, you will develop your exchange, your bank, your trading platform on top of those, right, on the blockchain. So how do you make that integration also safe, right? How do you avoid the risk there? How do you avoid, and we've seen this in the past from different providers, their employees have been targeted on phishing attacks, right? The solution was right, the technology was safe, but the employees, the human factor was somehow the goal of the attacker, right? So how do you avoid phishing attacks, this type of user authentication problems? There are vector attacks that we don't even think, like blockchain nodes, right? The blockchain nodes could be the target of a hacker as well. Once you have signed the block, once you have made sure the transaction, all of the approval chain has succeeded, then at the last minute, the hacker goes, exploits a vulnerability on the blockchain node, and then they switch the destination address, for example, right? That has happened in the past. Problems with infrastructure, is the infrastructure resilient or not? And now we are moving to NFTs, we are moving to DeFi. These in the end are pieces of software, right? And software, what we know about software is that can be exploited, right? So I would say cybersecurity risk is, with plenty of ramifications, the first of the largest, I would say, branches of risk. Then there is also another, I would say, another big column, another big group, which are the operational risk, right? I mentioned the human factor before. This is once you have a system and you have different crypto assets, who has access to those assets, right? What does the approval chain looks like? How many people are involved in the whole approval of a transaction, right? How do you enforce that approval? Who can make transactions? How much they can transact per day? How do you separate those permissions, right? How do you enforce the user authentication? So those are, I would say, very related to the nature of the business itself. It's not the same having internal treasury with crypto that having DeFi. The operational risk will change depending on each one of the business cases, but these, I would say, there are some common points there, right? Then the third point would be the asset loss risk. Okay, if all of these 2 points I mentioned earlier, cybersecurity risk, operational risk, fail, is there any protection, any additional protection we can have in case of disaster, right? Protection, especially in case of the users, right? What happened to the funds of the user? Are they covered by any type of insurance? So this asset loss risk is another challenge for, I would say, for institutional adoption. And then lastly, and I think JB and Patrick mentioned this earlier, is the compliance risk, right? In the end, we are moving towards a more increasingly regulated environment that will drive the adoption. How the service provider can reduce somehow their regulatory risk, right? How can make sure that they are not receiving, when they have fully automated operations, how can they make sure that they are not receiving funds related to money laundering or to ransomware or terrorism, right? So this, I would say, is the fourth pillar of the risk. So essentially, once we are able to solve these four risks, I think it's safe to move forward, right, to the adoption. It will help to the adoption from institutional players.
Yeah, totally, Roberto. And now that you mentioned compliance, following compliance rules is also key. So companies like us, like banks, we have to guarantee know your client, AML, etc., tracking the origin of assets, being able to detect illicit activities and provide also the regulators with the appropriate information. So JB, you are an expert in this topic. You have an impressive track record in the compliance field. So can you tell us how to tackle this challenge and what are the best practices, tools?
Yeah, absolutely, with pleasure. And if we take the example of Bitstamp, we have been on the market for a decade now. We have 10 years of experience with crypto. And early days, back in 2014-15, we were applying at the time for payments institution license, which has been granted in 2016. And that license was very helpful for us to build trust, with the ecosystem, especially with institutional clients. And by being regulated, early days also, we applied all the regulation around AML and counter-terrorist financing, and basically, to develop policies, package of controls in order for us to fight crimes and terrorist financing. And it is very important for us as an exchange. We serve today 5 million retail clients and also 5,000 institutional clients. And I think this program that we have built and developed and that we are enhancing, on an ongoing basis, gives the trust to our clients and partners. And as Roberto, you mentioned earlier, this is basically helping the entire ecosystem in the sense that we play the same rules as a bank, as a payment institution, or as an investment fund. And playing the same role basically is helping the entire ecosystem to understand each other and to minimize potentially the overall compliance risk. So that's the direction we have taken so far with the exchange, being regulated in the US, in Europe as well. And also, as mentioned earlier, contemplating for MiCA to get full licenses across Europe and the same level playing field with the coming regulation. So that's in a nutshell how we are developing, our compliance program. Just to give maybe a couple of numbers to give you the sense of how we manage and we take compliance very seriously. We have 120 people at the company out of 500 working in compliance. So this is quite significant. And we are hiring and enhancing our program on an ongoing basis, basically leveraging and implementing the same tools as any other regulated institution. But on top of it, as you know, we need to have some specific blockchain monitoring tools to monitor the transactions. So that's in a nutshell how we are approaching, AML and counter-terrorist financing at Bitstamp.
Thanks, JB. I mean, that's a topic that for traditional institutions is super, super important. So thanks for your views. And Patrick, you're an expert in risk management. So what would be the main differences in risk assessment of crypto products compared to traditional ones, if there's any?
Well, there are quite a few. But first of all, I would like to make a bit of a comparison that people can sort of put them at the right place. Cryptocurrencies and their volatility is pretty much comparable to emerging market currencies or equities. They're very volatile and they have always a regulatory underlying risk that overnight the country decides to be a non-deliverable currency and capital controls strike and you cannot move money in or out anymore. Similar things can happen to a cryptocurrency when a DAO decision happens on something, and for whatever reason you're not able to move or do what you would like to do with that currency. So there is always these snap risks which is very hard to prevent. They just happen. They're digital. Additionally, to just have an idea of the market or the financial implication on price, you also need to have a sense of software development and code. So each token you buy, there is always a risk that this smart contract or the code of the token behind has a flaw or has a backdoor or is not the way you would like to invest in something. And I'm not a coder, so I really rely on social media consensus when I read about a project, and I check up the team, which is a real due diligence process. Then it's basically what you also should do if you invest into a hedge fund strategy, or if you invest into an ETF that is investing in different kind of equities. You should look up who's running that ETF, who's making investment decisions, what kind of power do they have about the investment strategies. And this is for a lot of people something new, because the banker says, let's put some into this ETF, it's all good, it's all fine, UBS runs it, and you say, okay, let's go. But you actually should do that due diligence, and this is something that is now different on the crypto side, and this belongs to risk management, or it's a big word, risk management, but it's actually something you should do always if you put your money at the line.
Totally, Patrick. As you said before, there's a cultural shift, right? And we have to do our own due diligence and be responsible for those risks. Good. So, well, we've talked about tons of challenges, right? But financial companies, tech companies, and even governments, we have to make decisions soon on how to participate in this new ecosystem. And postponing this type of decisions may imply the risk of losing a strategic market position. So, Karl, I can imagine that your clients are asking your firm for advice regarding how to position themselves, and what are the key messages that you give to them? I mean, main business models, what do they need, etc.
Yeah. So indeed, there's a lot of interest and activity of our clients in that field. And first of all, I would say the level of activity really depends on the sector that you are at. And let's stay in the financial services world for a second. And generally speaking, you can say that those who have the biggest risk or are at most at risk are the most active ones. Yeah, and this applies to business models that heavily rely on infrastructure, like the big global payments providers or stock exchanges and the like. So they are very active in this and also very educated in this. And other sectors that follow now are, for example, asset management, where it's more a product angle. So they try to provide access to this new asset class, if we stay in crypto, for example, through traditional means, which has also seen a lot of traction. And then if you move further, and maybe in traditional banks like small business lending and stuff, there the activity is a little bit lower, because there are also other factors that are important. So it's not only about the infrastructure, it's about the relationship, the risk management capabilities, the models, the underwriting, and so on and so forth. But, and maybe we come to that also later, also these companies have certain risks when you look at the DeFi space and the protocols and the applications that come up there. So different let's say positions, and then obviously also different messaging depending on how impacted you are. I think you still can send some general messages, and I would say the first one is really crypto, digital assets, blockchain. It's here to stay. It will shape the financial services industry. It's not something that for folks in their basements anymore. Yeah, if you want to say like this, it really needs, and it step by step gets up to the boardrooms of the banks and the financial institutions. So when you think about the business models, that was also a part of your question. So the first, or the biggest traction we really see in everything that relates to trading cryptocurrencies. We've done an analysis that showed that last year, so in 2020, the global revenue pools for crypto trading were 13 billion, and we expect that to cross the 20 billion mark this year. So there is money to be made already now. Then from the institutionalization of the space, there arise many other attractive opportunities, and they relate to aggregation of liquidity. They relate to these assets to be custodied. They relate to also indexation, for example, as basis for further product development. And they also relate to risk management or to valuation, or what Patrick said earlier. You know, it's rarely anyone can say, why has the price of this or that asset moved that or this or that way in the last day or in the last week? In equities, you can track that down and build models around it and make forecasts. In crypto, it's very difficult. So that's definitely something, and the data around it that is attractive. Then I think another area is really the infrastructure. So payments, making payments instant and almost free is very interesting. And then not only in the consumer or peer-to-peer space, but also in the business-to-business space, very interesting. And for payments providers, also fiat on off-ramp. You know, you almost have a parallel world that has emerged there, and being able to bridge that and put the gateway and the customer experience on top of it is also a very interesting area to look at, especially when you think about DeFi again. Then tokenization. Here we see, as we mentioned earlier in the intro, access to new investment classes, new investment opportunities. There is one, let's say, caveat to make, that this area has been a little bit behind the expectations that were generally in the industry maybe 2, 3, 4 years ago. But still interesting opportunities, especially in private markets, that we see, because it's really an interlock with a more broader trend. You know, companies seeking funding in different ways than the traditional, than IPOs, many companies reaching unicorn valuations without ever being public. So interesting opportunities there, because this is really kind of where two trends come together, if you so will. Yeah, and ultimately, anything that is beyond finance. So if you think about GameFi, if you think about the need to have marketplaces for in-game assets and the infrastructure around it, also there we see very interesting opportunities. However, those being maybe, again, a different horizon than the ones that I mentioned earlier. Yeah, and the last one, what does it need? Sorry, and you cut me off, Coty. But just
go on.
What does it need? Speed is definitely one, and it has been mentioned many times. Then partnerships, ecosystem partnerships. These the successful players many times manage to collaborate rather than being siloed. Yeah, and also important, when you do these partnerships, it's important to understand the new power play. You know, the traditional fintechs, as I would call it, they have still pretty much relied on traditional infrastructure, you know, the fintechs that we had maybe in banking and payments. For the new ones, they could completely exist independently. So there is a shift in power play when incumbent institutions engage with these new players. I think that's super important to understand. And the last factor that I wanted to mention that is needed, because I like how Patrick, I think he was said it, you need to have people that understand the fundamentals of it, the technology, the coding. This is something, if you think of a research department in a bank, you know, historically those were financially educated people. Now you need to be able to form an understanding in a position also on the underlying technology, the underlying software, the underlying code. And these people are in high demand. So yeah, not easy to get them.
I can tell you it's not easy. The market is hot. And you mentioned speed. So we are reading news related to surprising events, and some countries are faster than others. And we see great contrast, for example, in the evolution and adoption of digital assets since El Salvador in September accepting Bitcoin as a legal tender. And that was the first country in the world to do so. But on the contrary, China has banned cryptocurrencies. So Roberto, your company was founded in Taiwan. Now you're expanding in Europe. Do you think that all geographies are looking at the same use cases, or on the contrary, each one is betting for something different? Are requirements the same for all?
I think there are two different factors to have into account. I wouldn't say that they are each area is looking for some specific things, but there are two factors that really influence on how the different adoption or applications go, right, geographically. The first one is I would say a word that keeps coming back is regulation, right? What is the regulation, the regulatory approach or clarity on each one of the regions, right? This might be related to different factors, how developed the country is, like, for example, in Europe, are you part of a framework like European Union, right? So that would be the first factor. The second factor, of course, here are the different applications are related somehow to the social realities of the different countries, or the social needs, I would say, right? So we have heard about banking being banned in developed countries, right? We have heard about improving accessibility to a more complex, I would say, financial services to retail investors, for example, right? As Karl was mentioning earlier, like tokenizing assets or like real estate, providing access to retail investors to this type of applications, right? So these are very different realities that are really tied to the appetite and to the reality of the country, social realities of the countries. What looks like is that even if they're kind of spread globally, looks like the different challenges have some, I would say, different common grounds, right? And it looks like this is one of the beautiful things about blockchain is like globally the community is trying to address those challenges, right, and try to provide solutions to those different problems, right, or applications. So, for example, we are seeing, we were mentioning about GameFi. At GameFi, we've seen GameFi as an application which is booming in two different regulations as South Korea or the Philippines, right, because they have a huge gaming community, something common they have in both areas, right. What we have seen also is this kind of application is driving innovation as well. One thing that happened, you mentioned earlier, El Salvador. Suddenly, out of the blue, El Salvador adopts Bitcoin as a legal tender. And then, for example, in our case with our company, we have calls with companies in El Salvador who were saying, okay, so how we can implement this to our reality, right? Our reality is we have little stores, which in the best of the cases are in a physical building. Sometimes there are stores on the street vendors. How do we accept $1 payments, having to wait for 30 minutes, 60 minutes settlement, and having to pay transaction fees double, triple, 100 times higher than the price of the product, right? So this kind of technical, this adoption is driving this technical, I would say, innovation as well, solving those problems, right? And the magic of blockchain is that this is being driven somehow globally, regardless of the geographical dispersion of the challenges.
Hey, Roberto, and do you think, you guys, that there's any political aspects behind this? Anyone wants to answer?
I would like to circle back quickly to what Karl has said, that the speed of development in different economic sectors, or being a company or being a country, is driven by how much they are affected by this new technology and by what it can do for you. So I'm a bit surprised by banks because they're affected quite a bit and they haven't really moved that fast, but I see their issue on the regulatory side, that they're getting blocked a little bit by that. But on the countryside, for example, you see these different developments, what Roberto now also mentioned, that you have El Salvador, who's really looking for an alternative of their current monetary situation they are in, to have a better solution for their citizens, where China has a completely different goal, how they can use the blockchain technology, and they're coming from a different background. Their currency is not transferable, so they have capital controls and they have very tight controls. That's the way they run their country. and they, because their country is also so big, it would make a lot of added value for the central party to know exactly what is happening with the money. Where is it spent? How quick is it spent? How does it flow? To maximize as well for their citizens. I mean, I would give them the benefit of doubt that they are actually looking for their citizens in certain ways to make it more efficient and make it better. But you just see how everybody is just looking from their perspective and how they can benefit the most out of that new technology, not new, but out of that technology development we see at the moment.
Yeah, totally agree, Patrick. Patrick, in the coming days, you are participating in another panel regarding DeFi. And DeFi is, it's changing crypto investing by offering yield, and the required DeFi infrastructure needs to be built for regulated financial institutions to adopt it. A regulated institution like a bank or like a regulated exchange, right, JB? So we see that DeFi is innovating to provide access to them, like with permission lending pools that ensure only KYC participants, to on-chain asset management and decentralized identity, right? But how do you see the institutional adoption of DeFi? Is any additional requirement challenge to the ones that we already mentioned?
I actually see an issue here that institutionalized DeFi is not DeFi. By definition, right? Because it's permissioned, the pools are permissioned, because you need those KYC and AML regulations being done, and you have policies, you need to show policies. Every regulator around the globe now has pretty much set the bar to actually have DeFi not as really DeFi anymore. But the technology and what the invention they built on the DeFi side can still be helpful and be an efficiency driver in the current traditional markets. And I really hope we see some adaptation of, for example, liquidity pools, or for example, an automated borrowing and lending facility where the banks can use the technology to make it a lot cheaper for their clients. So borrowing rates are coming down. Businesses are profiting from efficient processes of their requirements to get, for example, credit. But and this is a bit of my worry 5 years down the road. If the regulatory landscape is shifting further this way, like also MiCA is pointing to, DeFi will have it very, very hard to get enabled or get into the institutional space.
We need another name for this instead of DeFi, right?
Yeah.
We have to invent it. So for a question for all of you, how can your companies help other traditional companies in this journey? JB.
Yes, so we have 10 years of experience in crypto as we speak. So a lot of experience, a lot of knowledge. We have very good solutions for retail clients, having access to 45 digital assets, and also NASDAQ technology for our trading engine. At the same time, we have very well-designed solutions for institutional clients, whether banks or brokers or payment institutions are looking for solutions in the field of liquidity or brokerage, using crypto as a service powered by Bitstamp to offer crypto to their end clients. That's basically how we can give access to crypto, not only to retail but also to institutional clients, based on our 10 years of experience and expertise in this area, being fully regulated as well, giving full trust to other regulated institutional clients. That's definitely how we can help boosting the ecosystem with the solutions that we have in place today.
Thanks, JB. And Karl.
Yeah, so how can we help? First of all, it depends a little bit on the clients that we serve. On the investor side, so VC funds, PE funds, it's market scans, it's commercial due diligences to basically be able to get exposure to the space with the most, let's say, attractive or most promising assets in the market. The other one is when we talk about the incumbent players. And what we see is that in many of our clients, there are still very different opinions what the right approach to crypto and blockchain is across the organization. So I can imagine, Coty, you in Santander are probably on the enthusiast side. There might also be more critical voices. Yeah. And so what we can do there is really help form a consistent strategy to form also a consistent risk appetite. You know, I do not want to suggest that everyone needs to move in, double down, full speed, but it needs to, there needs to be a position, and there needs to be an understanding about the opportunities. And even if you, as an organization, don't move ahead, you should at least understand the cost of the opportunity. And the other one is, for the incumbent ones, is much more, not so much about crypto and digital assets specifically, but more about how to deal with innovation more generally, and how to balance resources, funding, people between the existing businesses and the next gen businesses, and how to do that in a balanced way to allow flexibility, but at the same time, synergetic relationships between the two as much as possible. And that, yeah,
I was going to say that I agree totally.
Yeah, and the last one is the let's say digital attackers that have now also to some extent become incumbents, or at least sizable organizations. And typically topics there are also strategic choices, which client segments, which geographies. Then also the topics that JB mentioned earlier, you know, the maturing of these organizations, of the operating models of these organizations in terms of procedures, policies, structures. That's definitely something that, yeah, we are very happy to do our contribution to have that space develop and rise.
Well, all of that is needed. Traditional financial institutions, I mean, all of this is new, right? So they indeed need this help. And Roberto, this is super obvious from your side, the security piece, right?
Yeah, absolutely. So, well, in the end, as I mentioned, right, the security from a 360 approach, right, from all of those different risk approach. As you mentioned about traditional companies, but also we see a lot of crypto native companies are building their own crypto services or services related to digital assets. So essentially, we have dozens of years of cybersecurity expertise. Essentially, what we will do is to help them build their custody infrastructure to safekeep and operate those digital assets in a secure way, also in a, I would say, usable way, right? For different use cases. So this could be treasury management, transaction automatization. We are also compatible, or let's say integrating new services as DeFi, we were mentioning, NFT, and so on, right? So what we are helping our customers to do, or what we are trying, our goal is to, all of these operations, what we call the wallet operations, wallet ops for short. Essentially what we are doing is we are bringing to Web3 what Amazon Web Services brought to Web2, right? That's essentially it.
Cool, thanks, Roberto. And Patrick, I should mention that Deutsche Börse Group acquired a majority stake in crypto finance this year. So this is a step forward in helping traditional institutions, right?
Absolutely. And I just wanted to say that I would like to see our company to be one of the bridge builders for institutionals that feel the need and feel the pressure of their clients to get access to this this new asset class. And sometimes it's very hard for these companies to either have the knowledge or the technology or the certainties that it actually is going to here to stay, as Karl said. And we can basically bridge it for them. We have the knowledge in-house, we have the technology that's needed from the trading side and from the custody side. And we even have, I would say, a very good knowledge of the ecosystem, the different coins, the different projects. And we do really feel it that our clients, when they talk to us, they appreciate that they can actually offload some of the questions their clients shooting at them, which just is almost impossible for them to answer. And I hope the bridge is getting now bigger and bigger, with Deutsche Börse also being on board, so we can actually fish for the real big guys compared to the companies we were serving at the moment.
You all are going to be super busy in the following months. Okay, so we are almost there, 4 minutes to end our panel. So I don't know if Victoria wants to tell us some of the questions in the Q&A. Victoria, is there any question that you would like to ask us?
Hello.
Hello.
Well, you have plenty of questions. I don't even know where to start.
I saw one that I'm interested.
Yeah, then go for that one.
I read here, what top 5 cryptos would you invest in right now?
That's a good one. No financial advice, right?
No, only personal opinion. Oh, difficult. I knew there was going to be silence here.
Yeah, I mean, it's obviously hard to name one, and I'm not going to do that just to. But I think I like what Patrick said at the beginning, and the question should rather be, which one should I invest in? Should be, where should I look for information and for insights that enables me to take my own decision, And I think that's really the thing. And if I had to, the way I think about it is, the space is so broad. So try to start segmenting the space. You have Bitcoin and the likes, which you can believe in the value or not. There's no intrinsic value as such. Then you have all the layer 1 solutions, scaling solutions. So they all have different characteristics. So you can look at this and think in which one you believe most. You have the DeFi space with very interesting projects. There should be definitely something of that also in the portfolio. So I think and then why not some meme coins, And I'm not saying that's a bad thing unless you understand what you put at risk, So yeah, I think the answer is have a good mix of these things in your crypto portfolio.
And some NFTs as well.
Yes, absolutely.
I knew no one was going to answer this question. That's why I raised it. So Victoria, any other question that you think it's interesting?
I see a lot of questions. I mean, we don't have time for all of them.
No, there's only 1 minute left.
Yeah, I don't know. I mean, the rest of you, do you want to say anything about these financial recommendations?
One question was directed at me. It's about regulated markets make for punishment with bad management, but with crypto there is no punishment because it's not regulated. What's your response? Well, first, my response is on the regulated ones. So are the bad management decisions actually being punished? And I just want to mention Wirecard. That's one. And did the investor get reimbursed? Probably not. The second part of that question, if I see an exploit, or we have seen many exploits in the past, some of these exploits have been reimbursed by the treasury of the project. Cream was, for example, the last one that got exploited on a front-end bug of different wallet providers. And they actually tried to reimburse out of their treasury the money that has been lost or stolen. Yes, obviously with that, the token loses in value, but there is a mechanism where people can vote for if this should be the solution or that should be the solution. I'm a clear defender of highly regulated markets. Everybody gets punished and everybody is safe. versus crypto, which is not regulated and nobody is safe and nobody gets punished. That's just not true.
Okay, thanks, Patrick. I think that we ran out of time. That was super interesting. Thank you a lot to our great speakers, to Victoria, Daniel, and their team for making this possible. And also thanks to the audience. I hope that you have enjoyed our discussion as much as we have.
Thank you so much, Coty.
Thank you, and have a great convention.
Yeah, I mean,
Thank you so
we
much.
have a lot of questions in the chat that were not answered. So guys, please reach out to the speakers, either directly to the networking tool at Gridl or some of their team members. So, I mean, we want you to get your answers. I'm sorry, we're running out of time. But again, thank you, Coty. Thank you, Karl. Thank you, Patrick. Thank you, JB. Thank you, Roberto. See you around. Bye.
Thank you.
Thank you so
Bye.
much.
Bye, guys.